My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so we have a lot to go over. Yesterday, the semiconductors got slammed. Overnight, we saw more weakness in the semis on the back of AMD, SMCI, and ANET earnings. This morning, we're seeing a little bit of a recovery, but the markets are in danger zone, all right? We are in a danger zone in the markets. I've gone over the charts on the S&P 500 as well as the SMH, both showing why those could be setting up for a big correction here in the coming weeks. All right, so number one, we did get ADP private sector data out this morning. That's the jobs report that's put out by a private company. Since the government is shut down, it is the only number we will get here until the government reopens. And it came in slightly, I repeat, slightly better than expected. ADP coming in at 42,000 jobs added in the last month versus 32,000 forecasts. So just slightly better. Interestingly enough, this did push the futures up a little bit in the pre-market here because, again, it takes off that edge. I think there was this underlying fear that the bubble with AI stocks was breaking and the economy was falling apart. This kind of firms the ground on the economy, at least in the near term, that the economy is not diving to the downside. All right, let's get into the charts here. This is the S&P futures. This was yesterday. So yesterday we had that initial push up and then the rollover here and then the continued selling here in the after hours on the back of AMD earnings. Overnight, we did bounce back, chopping over here. And then this morning, we started to move higher on the back again of kind of that ADP better view on maybe the government shutdown nearing an end. And I'm hearing more and more chatter that there's more and more bipartisan discussions that could get the government back open here in the coming days. So we'll watch and see. But again, I only think the government reopening would be a small positive, maybe a one-day catalyst for a bounce versus, again, the overlying weakness that is slowly creeping in and the valuation aspect in the markets. All right, let's go to the S&P 500 weekly chart and check in on this one. This is my favorite chart to follow right now. It is the S&P 500, so it's the main index, again, in the markets. And you could, again, see your 2020 low, your 2022 bear market low, and your liberation sell-off low. And then you have subsequent lows along here. That gives us our high from the bull market of 2021 and has marked, as of now, the high on the S&P. And look at that weekly candle starting to form here, which could be, again, we'll see where it is on Friday, but could be a big drop or reversal candle following an almost topping tail right up there last week. Now, that contrasts with the SMH, which, well, I wouldn't call it a contrast, more it continues to show its force with this chart here. And again, this is your weekly chart of the SMH, which is the Semiconductor ETF. It includes names like NVIDIA, Broadcom, AMD, and so on, and basically marks what the semis have done. And what we see here is in 2021, you got 102% above that 50 moving average, the 200 moving average, and then it collapsed back down. Here in 2024, we got 102% above the 200 moving average. And once again, we collapsed back down. And then lo and behold, as I showed you guys in the last two game plans, you got 102% above the 200 moving average once again. And now we're starting to correct. And so the idea is that charts basically let us be logical. They show us things because charts are based on greed and fear that happen over and over again. And when you see something like this in 2021 and 2024, and then you have the same repetition, who are we to say this time is different? Everyone loves to say this time is different. But in reality, we know that history, while it may not perfectly mimic, it often rhymes. And that's, again, something that leads me to believe the semis are at an inflection point for a rollover. Now, as always, we want to talk about where we could trade down. I'm going to get rid of these trend lines here. Let's go back to our daily chart. Where could be a buyable level on the SMH? And for me, this would be your key level. So if we do get a correction in the semis, I'd be looking for this area, the former high going back to 2024. Notice how we chopped along it, held the level beautifully right here, then did a springboard surge. This would be my first buyable level on the SMH at around 284 on that chart. So again, as traders, right, as technicians of the charts, we always want to be looking to see, okay, well, this might be overbought now, but at some point it becomes a buy. And sometimes when it goes back up, it sometimes becomes a short, right? And so you're never attached, like emotionally attached. You never love something, right? I always say my famous line is never love something that won't love you back. And a stock or an ETF is not going to love you back. Therefore, use it to generate wealth for your friends, your family, yourself, etc. But don't fall in love with it and just blindly follow it to the ends of the earth. People do that with stocks like Tesla, like Nvidia, like Palantir, like Robinhood. And while they've returned great things, they will at some point have their reckoning day. Remember, in 2021, Tesla had one of the most epic runs in history. In 2022, it corrected 75%, fell 75%. And again, this warning signs were there, just like in the dot-com bubble, the warning signs were there, just like in 2007, going into the Great Recession, the warning signs were there as well. All right. So that's where we are right now. Doing a quick check in on the dollar. The dollar remains strong, but it is into a resistance zone here. Notice how many up days we've seen on the US dollar. 1, 2, 3, 4, 5, 6 up days in a row. This tells me we're coming into what's called a time count. Once we get that, that's again would be probably in tomorrow's session. Start looking for some sort of pullback in the US dollar. I don't know if it'll be a big pullback, but it'll be some sort of pullback after 6 candles up, coming into the 7th tomorrow, and right in the resistance zone here. Notice where the resistance zone comes from. It basically was our pivot low support here going back to 2023 all the way through, and then has become resistance on the upside. So again, not trying to reinvent the wheel here. We just know that it was resistance here. It was resistance over here. It was support all the way back here. Therefore, we have to assume until proven otherwise that it's going to be resistance again on the chart of the USD, or the DXY in this case. Quickly looking at the 10-year yield. 10-year yield's been pretty quiet of late. You can see again, we had the surge on the back of the Federal Reserve last week, and then sideways consolidation since. This actually could be forming a bull flag, so be aware. This could be, if we continue to hold this pattern, this again would be a classic bull flag scenario. Up and sideways consolidation generally leads to further upside. So again, how high do I think we'll go? Honestly, I don't think we'll go that high. We can just clearly see that there's a resistance level right up here around 4.18 to 4.2 on the 10-year. You can see support, 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 broke, resistance, resistance. And if it breaks up, this would be your kind of general target, 4.2%. Flipping over to earnings. Well, let's get, again, it's always good to go through the hardcore stuff, the S&P, the dollar, the key trend lines, the SMH, which is more of a broad signal on the markets, right? Is the bubble in AI starting to deflate? And by the way, AMD had good earnings and it still went down. Palantir had great earnings, still went down, right? So you're getting to this point where valuation is starting to mean something. We saw this with Meta, by the way. I think Meta kind of started this. While Meta's not a direct like chip maker, they do have a lot of AI. They're buying a ton of chips from NVIDIA. And what we saw with them is Zuckerberg once again was like, hey, we're going to spend billions, tens of billions or more dollars than we even announced before. And what happened to the stock? It fell sharply and kept falling because people at some point, investors want to say, are we just throwing money down into the metaverse, which turned out to be nothing, right? They were throwing billions and billions of dollars at the metaverse, turned out to be nothing. Is that what's going on now? At some point, investors need to say there's a light at the end of the tunnel. And I think they're starting to say that on some of these AI plays at these ridiculous valuations. Okay, so going back to AMD, you can see AMD flushed as low as around 235. It has had a great bounce back here. So again, it's only slightly negative on the morning session. We'll watch and see where that goes. Because of the only slight negative, there's not really a trading level. But if it does dump out like Palantir did yesterday, what level would I be eyeing for a day trade today? There's a gap fill right here at 217.75 that should be good. If you're really aggressive, this 235 level could be played. I will not play that level, and I'll tell you why. What did I say the low was pre-market? So we've already hit that level, right? If we flip back to the chart, look, we kissed the level. There's my trend line from the daily chart. We kissed it pre-market. So that to me has already been hit. One thing you learn in technical analysis is that the first hit of major levels is the strongest. Same thing as the door theory, right? If you have to break through a door, it's going to be strongest when you first hit it. After multiple hits, it weakens more and more until it breaks down. So again, the best trades are going to come off of the first hits, the first time something fills a gap, the first time it hits a double top. Those type of things are always going to replicate the best opportunities, aka the best probabilities. All right. So let's move on here. So SMCI, another semiconductor. Now, these guys missed earnings estimates. Now, they did raise guidance for the full year, but they, again, missed earnings, and that is never something that can be had with an AI stock. Now, this stock has not been a great performer. If we look at the charts here back in 2024, this was its heyday. Since then, it's been forming kind of what I would call a bear flag, right? Do you guys see that? So you have this move down and then all of this sideways chop. That's kind of bearish, right? Overall, especially when every other AI stock is ripping higher and higher and higher. Look at this, guys. And this is what has me thinking it's going to go lower. Put a trend line in connecting all these lows. Look at this. All of these lows perfectly align, right? All of them right through this area here and then right through there. And look, we're now trading below this trend line. If SMCI closes below and confirms, it is likely headed sharply lower. Minor support at just below $40. That might be day tradable for today. But really, in actuality, I would start looking for this zone here around $28.50 to $29 as a downside target on that. Potentially, if we see a bigger correction in AI stocks, much, much lower. But you can see, again, look at the beauty of this chart. Like, how easy is that to just say, okay, here's a major trend line that's worked as support. Notice the more it hits, finally it starts to break, right? And now we're going to watch. Now, a lot of people would jump the gun. Pre-market, it's trading below this level. They say, oh, it's done. I'm going to short it. I don't do that. Number one, the stock was just a few days ago $53. Now it's down $10, basically down 20%. So I don't like to chase. Number two, we have to see, does it rally intraday and close back above this level? Because if it does, then technically it's safe from a breakdown. We got to see, does it close below? Does it confirm? Those are the telltale signals. Here's a chart of Arista Networks, ANET. ANET is another kind of ancillary AI play. Again, data centers, etc. This stock, again, got crushed on earnings, just like AMD. It's rallied back, but still down on the morning session. We look at this chart, you can see it's, again, if we go back to where this was trading in 2022, I mean, we're basically a $20 stock. Recently, it hit a high of about 165. Now, it's pulling back. Where are the levels to watch? A key level that'll be interesting is going to be right here. There's pivot lows and a gap fill at 138.75. Be careful on that one. It is a higher risk level as it basically tagged that pre-market, just like the SMCI, or was it AMD level. But really what I'm going to be looking for is this area here. So this area in here around 130 Pierce, this would get me intrigued. And then on a swing trade basis, there's a huge gap fill here. So again, for those of you that don't know what gap fills are, price closed here on this day and opened up here the next day. That creates what we call a gap. And when gaps get filled, technical analysis dictates that you usually get some sort of bounce there. All right. Now, again, how big of a bounce, we don't know, but that is, again, why when you hear me say gap fill, I'm referring to a larger gap right there, where gap fill would be the close of that day. A lot of people, by the way, think gap fill is when it fills the candle, but I actually believe it's more so at the actual closing price. And in this case, it closed lower the previous day, right in that range. All right. So that's the level I'm going to be keeping an eye on as a swing trade on ANET. UPST, buy now, pay later, not going so well here, as we can see. This stock, again, down sharply. It is coming off the lows of the session. But you can see, again, this has had some great pops, but also big rollovers. The big level for me, folks, And again, this one's pretty easy to spot. A pivot low right through here. So you have this low and this low, and then you can even extend this out and you can see how it comes back into these former levels. Like, look at all these levels. This was obviously a very big level. If for some reason we flush down to 31.50 today to 32, huge buyable level, in my opinion, for at least a day trade, maybe even a swing trade bounce. Pre-market, this got as low as 38, so it would still have to go quite a bit lower than that. But I'll be watching UPST in the coming days to monitor that level. AXON, this is a smaller stock, still 55 billion, but it is getting trounced here, folks. Massive move lower on AXON. Take a look again, gapping down to $548. There's a little bit of a gap fill here at around 542, but really for me, again, I'm going to be eyeing this area. There's a gap fill down here, and that's at 470, by the way, and then some pivot points right around 480. So 470 to 480, huge level. That would be a good swing trade, in my opinion. As a day trade, if you're aggressive, this 542-ish, 540 level could be of interest, and it's very, very close to that now. Last two I'll just do CAVA and McDonald's. There are some others, but again, I don't want to waste too much time doing this. But here we can see CAVA flushed after they basically warned. Again, same issues as Chipotle here, folks. We are seeing more and more that retail consumers are struggling to even buy Chipotle or CAVA for dinner. All right, the cost has now gone up with inflation, etc., and it's basically pricing a lot of the younger generations out of just getting even fast casual dinner, which is pretty remarkable. So that's where we are. We saw Chipotle get crushed recently. CAVA fell on that news with Chipotle, so it's not down as much, and it's even bouncing back a little bit here. Not down huge on the chart, but you can see basically this thing has been in a steep downtrend. My big level on this is going to be around $45. There's a key pivot of a former inverse head and shoulders. Do you guys see that pattern, by the way? You see the inverse back here? So you basically had shoulder, head, and shoulder. So that's your inverse head and shoulders there. And then look at that's a bullish pattern, by the way. And look at the run it had. Incredible, incredible run. But my point being is that these two pivot tops and this pivot retrace to the scene of the crime right here, those will now give us technical support, right? So if we zoom out here, that will now become support on the way back down, right around 45 per share, maybe just below 45. So that's what I'm looking for on CAVA. I think that could be a very interesting level. And then McDonald's initially fell, now pushing up a little bit. Not a big move, $8 move from yesterday's close, basically. Again, on a $300 stock, that's minimal. But again, you can see McDonald's has been just chopping and treading water for a long period of time. Now, a couple levels to watch on McDonald's. You have this trend line, which is going to be resistance. So if we rally to 316 to 317, there's a shortable level there on McDonald's, classic downsloping or descending trend line. And then likewise on the upside, if it starts to sell off, you have a major level that you do not. If you're a bull on McDonald's, you do not want to see this level break around 295. We get below and confirm, this thing starts to head much, 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 much lower, in my opinion, over the coming weeks and months. All right. So that kind of concludes the earnings. We did get Rivian out. Rivian, last I checked, I think it was up, but now I think it might have gone negative. Either way, not a huge, huge move, at least. In fact, I do want to check in on Rivian just for my own sake. Again, as a trader, I need to be aware of this going into the open. Yeah, still up on the day. So you can see it kind of sold off initially on earnings, then rallied, then moved back higher here. So it is up. Again, is it tradable? I mean, it's basically going back to where it was trading just about a day ago. So nothing really on this. Gap fill up around 1460 would be interesting. And then support down around 1160 would also be interesting. All right, Bitcoin. Oh, goodness. So Bitcoin is playing out just like the charts alerted us it would, right? We talked about where resistance was on the daily chart. We talked about how this trend line up here goes back to the 2017 bull market highs, 2021 high, all the way here. It got rejected, right? And so this is, by the way, you'll notice that, again, the theme here is to trust the charts until proven otherwise, right? Charts levels will eventually fail, but until they fail, we're supposed to trust them. And that's exactly what you do here. So you can see that trend line literally goes back to 2017, yet here it got rejected, boom. Here it got rejected, boom. And so when we were up into this level, that made perfect sense. I shorted it with members of Smart Money Crypto, right? Our swing trades crypto service. And then look at the drop on that, right? So again, it's just about trusting the charts versus our personal biases and emotion, which usually make us do the wrong thing. And I can vouch for that. When I was a younger trader, it always seemed like it was getting in the way of me making money. In any case, we then had the drop here. We had this trend line here, which the market kind of made it look like it was going to get back above. And if we put this trend line in here, right there, this was the trend line we were using, right? And so here's your low, low, low. We hit it, we bounced, we broke below, we retraced, rejected, and then we closed above. A lot of people got excited. Oh, Bitcoin's going to break up. I said, don't get fooled here. It has not confirmed the breakout back above that level. And what happens? The rug gets pulled. Yesterday, we pierced 100,000. All right, we basically touched this level that I gave you guys as minor support right here at around 98,500. This little pivot low right there. You can see the lows there. We're getting a bounce today. I don't think Bitcoin's done going down. I still have this longer level here. I'm going to switch colors on it so it stands out more. This is the one I'm looking for. This is the one that I think if Bitcoin's going to make a stand, this is the one that needs to get tagged. On the other side, if this breaks, that's a lot. That's very, very bad because this was the beginning of the uptrend really on Bitcoin. If this breaks, again, that would break the bull market uptrend that has lasted for basically 2 years, since October of 2023, exactly 2 years. All right, gold. Gold getting a small bounce today. It continues to hover here around my first technical level that I gave you guys. Again, this has been achieved. I'm just leaving it on there now for us to kind of monitor, but I still think gold's going to go lower here. Again, looking at 38.75 is still a high probability move to the downside. Silver's getting a little bounce. Again, same sort of thing. To me, silver's beginning to form a little bit of a bear flag. What do I mean by that? Well, we have this trend line right with this, right? So you're starting to form this little kind of choppy sideways to slight up, which again, here's your flag pull down and here's your flag. If we break below this level here, that's when it's game on. I still have a downside target on silver for $43 to $42 per ounce. Oil had the inverse head and shoulders. It still hasn't triggered. It's still forming it. We'll continue to monitor this. Again, shoulder, head, and potential shoulder. Again, until the neckline breaks, it is not in play, but I will monitor it. Here's your neckline around $62.30. And then lastly, natural gas here. Nat gas continues to push. Yesterday, it continues to head. Again, probably due for a little bit of a pause, but I still think there's upside to this $5 and change zone right up here, which again is a major low pivot, and high pivot right there. This should be your target zone on natural gas. Now, usually I try to take some questions. Again, I'm running out of time today, so I won't be able to, but keep posting those questions, guys. As always, I'm going to be trading the market just in a couple minutes when the market opens in the live day trading room. I encourage you to come check that out. Even a one-day pass. You can do a one-day pass. If you're off from work one day, if you work for the government, come join us. I know you're not working right now. So again, the idea is learn in there. We give out live trades, exact entries, exact exits. The track record is always public, folks. So you can go and look at that on our Verified Investing Live Day Trading Room sales page. All right. As always, I love you guys. Appreciate you guys putting time and effort to watch me. That's why I always try to bring my best game to you guys, to respect your time, which I vastly do. And I want to thank you, as always, for just being amazing followers of Verified Investing. Thanks so much, guys. Have a good one. Take care.